In this video, I will be speaking about Euro GBP. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. We will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance, which has now turned support here. Now, as we're testing previous resistance turn support, we could expect a potential rejection to the upside away from this area, completing this impulse correction and impulse pattern to the upside. We can also notice how since we have an impulse and correction, if we want to measure this correction, we have to take a Fibonacci from the low to the high of this impulse. And what this shows is that the market is currently testing the 50% retracement taken on the impulse and currently rejecting it to the upside. Now, if we drop that on the weekly time frame, we can see how from a weekly perspective, we do have a quite important structure level here. This is previous support, turn resistance here, which is now once again support here that we could expect this market to potentially reject to the upside. And dropping down on the daily, things become even more interesting. In fact, I did speak about Euro GBP a few days ago after the creation of this overextended W formation. I explained all the reasons for which we could expect a potential correction, which is in fact exactly what the market is currently giving us. However, in creating this correction, the market is also currently printing an M pattern. And in general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the M pattern at the neckline, which is the previous support turned resistance. Now, before we continue with our analysis here on the daily time frame, we can see that a stronger euro than the pound is exactly what we need for a potential completion of the M pattern, so things are starting to align. Now, if we look at the structure, we can see that here is where we have previous daily resistance from which the market created this red candles, which is now turned support here. So if the market will go and test this previous resistance turn support, there's a good probability that from here we might see a reversal to the upside for the completion of this daily M pattern at the neckline. So how we could be approaching this potential move to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of the M pattern at the neckline. Now, if you enjoyed this free analysis education and update, make sure that you drop a like in a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.